Imagine a country where iron ore flows like champagne. Real estate is a national obsession, and the economy seems to defy the rules that govern the rest of the world. Welcome to Australia, the so-called lucky country, where prosperity feels like a birthright, and economic downturns are things that happen to other nations. For decades, Australia has ridden a wave of mining booms and soaring house prices, building one of the most resilient economies on the planet. It's a place where luck isn't just a state of mind, it's practically a business model. But scratch beneath that sunny surface, and you'll find an economy that's starting to show some serious cracks. Today we'll dig into the other side of Australia's economic miracle, the cracks that are starting to show in its reliance on mining and property, the growing wealth divide, and the pressures of a housing market that seems out of reach for so many, which could be the country's undoing. How long can the country ride this wave of good fortune before its luck runs out? In this video we'll break it all down, but before we get into it, please hit that like and subscribe button. As a new channel, this goes a long way. Now back to the video. Australia's economic story often begins with its natural resources, and for good reason. This nation is blessed with vast reserves of iron ore, coal, natural gas, and gold. For decades, these resources have driven Australia's wealth and powered its transformation into one of the world's most successful economies. In 2023 alone, Australia exported nearly 895 million tonnes of iron ore, more than any other country, accounting for over half of the global seaborne trade in this critical resource. That single export was valued at an astounding 110 billion Australian dollars, underscoring just how much Australia's fortunes are tied to what lies beneath its soil. But it's not just about the numbers, it's about the timing and impact. The mining boom of the early 2000s to the 2010s didn't just increase Australia's GDP, it fundamentally reshaped the country. By 2013, this boom had lifted real per capita household disposable income by 13%, raised real wages by 6%, and helped keep the unemployment rate down by 1.25 percentage points. Australians were living large, buoyed by the high demand for their minerals, particularly from rapidly growing economies like China. However, when you dig deeper, you realize this success wasn't purely the result of smart economic planning. It was a bit like winning the lottery repeatedly. Australia's wealth largely comes from digging up minerals and selling them to the highest bidder, which works great until the global demand starts to wane or competitors step in. Economists call it the resource curse, the paradox that countries with an abundance of natural resources often experience less economic growth, more corruption, and weaker democracies than their resource-poor counterparts. Australia has so far managed to avoid the worst of these pitfalls, largely due to its strong regulatory frameworks and a diversified economy that includes sectors like agriculture, manufacturing, and services. But even with these safeguards, Australia's over-reliance on natural resources has put it on shaky ground. Despite being one of the world's wealthiest nations, Australia's economic complexity has been steadily declining. The country dropped from 57th to 82nd in global economic complexity rankings between 1995 and 2021, which suggests that its economy is becoming less sophisticated and more dependent on raw material exports. This is a big deal. Economic complexity is what allows countries to innovate, adapt, and thrive in a changing world. Countries that are economically complex tend to be more resilient to shocks, better positioned to develop high-value products, and more capable of pivoting to new industries. Australia's lack of complexity means that if iron ore prices tank tomorrow, the country could be in serious trouble. Now let's shift our focus to another cornerstone of Australia's economy, the housing market. For years, Australian property has been treated like a golden goose. House prices have climbed to staggering heights, turning ordinary homes into multi-million-dollar assets. In Sydney, the median house price to income ratio has ballooned to 13.8, making it the second least affordable city globally, only trailing Hong Kong. Melbourne and Adelaide aren't far behind, consistently ranking among the top 10 least affordable cities in the world. Over the past 2 decades, house prices in Australia have more than doubled, while wages have barely kept pace. To put it in perspective, back in 2002, the ratio of median house prices to disposable household income was 4.9. Fast forward to 2024, and that ratio has jumped to 8.6. Simply put, it's getting harder and harder for Australians to own a piece of their own country. So what's driving these skyrocketing prices? Part of it comes down to policy. Government incentives like negative gearing and capital gains tax discounts have turned real estate into a playground for investors, both local and foreign. Negative gearing allows property investors to deduct their losses from their taxable income, effectively encouraging speculation in the housing market. It's no surprise then that 1% of Australians now own nearly a quarter of all investment properties, turning housing into a speculative asset rather than a basic necessity. While property investors may be enjoying the ride, everyday Australians are feeling the squeeze. Wage growth has stagnated for over a decade, with real wages falling by 4.8% since the pandemic. Even though the economy overall has seen moderate growth, the benefits haven't trickled down to the average worker. In fact, by 2023, Australian wages had dropped to levels not seen since 2011 when adjusted for inflation. Rising costs of living compound this problem. According to recent surveys, more than half of Australians are struggling just to keep up with everyday expenses. Inflation is eroding purchasing power, and essentials like food, energy, and housing are becoming less affordable by the day. The gap between what people earn and what they need to spend is growing wider, creating a silent crisis in one of the world's richest countries. And then there's the role of immigration, Australia's not-so-secret engine of economic growth. In 2023 alone, the country welcomed nearly 720,000 new migrants, the highest number in the last decade. These newcomers play a vital role in driving demand and filling jobs, especially in sectors like education, healthcare, and construction. But there's a catch. This influx of people has also put immense pressure on Australia's already stretched housing and infrastructure. With so many new residents entering the rental market, competition has become fierce, driving up rents in cities like Sydney, Melbourne, and Brisbane. In many cases, rents have risen by over 18% in the past year alone, making it even harder for locals to find affordable accommodation. While immigration boosts the economy on one hand, it also exacerbates the housing crisis on the other, creating a complex balancing act that Australian policymakers are struggling to manage. So, where does Australia go from here? The country's reliance on natural resources and a red-hot property market has created a paradox. It's both incredibly wealthy and worryingly vulnerable. To secure a sustainable future, Australia must diversify its economy beyond natural resources and real estate. The focus needs to shift toward innovation, technology, and industries that add more value to the global economy. Investing in research and development, R&D, is one of the most critical steps Australia can take. Currently, Australia spends just 1.7% of its GDP on R&D, well below the OECD average of 2.4%. To put this into perspective, countries like the United States, Germany, and South Korea consistently invest far more in their innovative sectors. Without a stronger commitment to R&D, Australia risks falling further behind in the global race for technological advancement. Reforming the tax incentives that fuel the housing market could also be a game changer. Abolishing or limiting negative gearing, reducing capital gains tax discounts, and encouraging investment in productive sectors rather than speculative assets could help level the playing field. With regards to stable housing, Australia could also draw inspiration from nations like Austria and Japan by increasing the percentage of non-private housing within the overall market. Take Vienna, for example. The Austrian city has managed to balance affordability and quality of life by implementing a social housing model, where nearly 62% of its population lives in government-subsidized housing. The city builds around 7,000 new affordable housing units each year, which accounts for nearly half of all new constructions. These high-density developments prioritize green spaces, community facilities, and diverse living arrangements, creating sustainable urban environments that cater to a wide range of residents. If Australia could adopt even a fraction of this model, aiming to increase its investment in social housing by at least 30 to 40% and focusing on mixed-use developments, it could significantly boost housing affordability while still fostering vibrant, inclusive urban communities. In conclusion, Australia is indeed a land of great fortune, but its current trajectory is not without risks. The country's economic prosperity has masked underlying weaknesses that, if left unaddressed, could have serious consequences for future generations. While Australia has managed to ride the wave of its resources and property markets for decades, its luck may be running out. The path to sustained prosperity lies in diversifying its economy, investing in innovation, and ensuring that all Australians have access to affordable housing and fair wages. If you found this deep dive into Australia's economy insightful, don't forget to hit that like button and subscribe for more content on global economic issues. Let us know in the comments what you think Australia's biggest challenge is and how the country can turn its luck into long-term success. Thanks for watching, and we'll see you in the next video.